Welcome to the Empowered Investor Podcast. Have you ever felt overwhelmed by the sheer volume of choices and voices telling you how to plan or invest for your future? With his straightforward approach, host Keith Matthews of Toulette Matthews & Associates cuts through the noise to help you create a winning action plan for you and your family. The decision-making framework discussed in this show can transform you and your investment experiences and will increase your odds of becoming financially secure. Learn more and subscribe today at tma-invest.com.
Welcome to the Empowered Investor. My name is Keith Matthews, and I'm joined by my co-host, Marcelo Taboada. Marcelo, how are you today?
Keith, I'm good. Interesting times.
Yeah, today we're doing a special episode on the new introduction of tariffs, and we are Tuesday, the day after we got the reprieval and sort of the extra 30 days. So lots of things changing. The intent here is to do our very best to provide some perspective to all of our listeners, clients, and friends with regards to this topic. So in today's show, we're going to review the current situation. We're going to review the basics on how tariffs work, examples from history. We'll talk about the fallout and the reaction in the United States right now, not just at the political level, but also at the grassroots and the business level. We'll talk about the possible effects to the Canadian economy. And then we'll discuss, sort of as we wrap up, what options Canada has. How do you move forward? How do we move forward? What do we hear are the best ways to move forward? And then finally, of course, what investors should do, investment takeaways and best practice ideas. So, Marcelo, let's start by just setting the stage. Where are we? We're Tuesday. Give us a bit of a debrief as to where we're at.
Yeah, everybody followed the election, right? And there's been rumblings about tariffs and whether it's China, Mexico, Canada. Trump has been on it in the campaign since he got elected. But everybody kind of thought, you know what, maybe it's just a negotiating tactic. It's not going to come to fruition. I think the closer we got to the deadline, which is February 1st, people started realizing, hey, wait a second, maybe this is going to be true. So Saturday came, February 1st, they confirmed the tariffs. Here we are Monday, the tariffs are going into effect.
And then Canada imposed their own tariffs.
Correct. So we see retaliatory measures from Canada, especially, alcohol and a few things. And then we get in the news that Mexico has now gotten a 30-day extension because of his meeting with Claudia Sheinbaum. And now, a few hours after, we got the same headline for Canada, which is Justin announced $1.3 billion of border security spending with a few measures here and there. And we get a 30-day delay on the tariff. So here we are now in a situation where it may still happen where we have a 30-day delay.
Yeah, fair enough. You mentioned that most people felt it was a negotiating tactic, and it's all over the press and the Wall Street Journal and Canadian newspapers that most individuals didn't think it would actually come to fruition at the end, and that so there'd be some sort of last-minute deal. And ironically, these tariffs were launched, and within a day, there's sort of this discussion of holding off for a little bit. But I think Canadians are definitely feeling wounded, definitely feeling hurt, definitely frustrated. And it's almost like this moment in time has happened, and it's like we're not going back into the previous years and the way people thought. But we'll talk about that a little bit later in the show. What was the justification for the tariffs?
So there's a few things. So I think you're absolutely right. I think people feel wounded in this country. You think about Europe or Asia, there are some hostility between some countries with close geographic location, but Canada and the U.S. have been friends since the 1812s, right? Like we had that small conflict and it's been a fruitful relationship. So people are puzzled, right? But we'll talk about it later, but it is what it is, I guess. So now what the U.S. is saying is border security. They're saying that there's a lot of fentanyl and illegal immigration happening at the border, which there's some disputing. I mean, I've seen some of the official numbers and it doesn't seem like it's a big problem. So there's that. Then there's national defense spending. I think everybody's heard Trump's comments on NATO and the level of spending of GDP. Canada's not even close to 2%. He's demanding anywhere between 3 to 5%. So there's some of that.
I mean, the issue is still even just to get to 2%.
Correct. Which is a big deal for Canada, right? And you can't just increase it because it's a percentage of GDP. So if GDP goes up, you have to increase your numbers. So anyways, it's a hard thing. Then based on the neighborhood relationship, he feels that some industries are abusing the subsidies in Canada, and that puts U.S. producers at an unfair advantage, so to speak. So those are the three main issues that we're having in this conversation.
And those are the issues that essentially Trump is using to justify why he's doing this. He's always said he loves tariffs. And so he's putting tariffs on probably the number one ally to the U.S. and using all these different reasons as to why he's justified to do so. So again, we have this 30-day sort of break, if you will, but let's think out in the future. One of the things that we want to discuss is, well, what happens if they actually do go through? What are the implications for us as a country? And before we get there, I mean, generally speaking, what are consequences if there was to be such an increase, if it ever was to come through?
Yeah. So I think the U.S. and Canada, just as you know, we share one of the largest trade relationships that's valued over $1.2 trillion annually. So that's a lot of trade going on. Then they have impact on economic growth, businesses, jobs, stock markets, and ultimately inflation, which affects consumers. Obviously, also, they can lead to significant disruption on both sides, and especially if they persist, because I think they can be used as a threat for a period of time for things to adjust. But if this becomes a trade war, the longer it goes, the more everyone gets affected.
And so often economists will point to a term called stagflation as something that comes from increased tariffs of any sort. And you have multiple trading partners, everybody increases their tariffs, inflation goes up, and your economy slows down. Stagflation. And that, in all of sort of the economic scenarios, is one of the most difficult scenarios for any country to sort of try to navigate. And that's what people's concerns are. Do we end up in that kind of a world? We'll talk about that in a little bit, but let's jump to, how do tariffs work?
So the definition of a tariff is essentially it's a tax or a duty imposed on imported goods to either protect domestic industries, generate government revenue, or retaliate against unfair trade practices. So you're essentially making foreign goods more expensive in the hope of boosting your domestic economy. That's essentially what it is.
Yeah, and then the economic theory behind it, unfortunately, breaks down, because economic theory would suggest that capital has to go towards the most productive industries, regardless of where they're at. So if you force capital to stay within certain borders, you're forcing inefficiencies. And that means higher prices, lower growth, which back to this concept of stagflation. Let's talk a little bit about some of the historical, because this isn't the first time this has happened. I mean, there's a few times in the Canada-U.S. history where we have had tariffs. In fact, we've got still some lumber tariffs on the go right now. But let's go back in time, and what happened?
Yeah, we've had a few. So in 2018, we had the U.S. steel and aluminum tariffs. So that resulted in higher consumer prices, but failed to revive U.S. steel production. So there were tariffs, it raised the prices, but the industry didn't revive. So it created winners and losers, but it didn't end up helping the United States and that industry specifically. So it was a futile exercise. Then we had the big one in the 1930s called the Smoot-Hawley Tariffs. So that was a big one. The U.S. raised tariffs on 20,000 goods. So global trade fell by 65%. Canada retaliated. Trade with the U.S. essentially collapsed. And everybody knows the economic impact was huge during the Great Depression. U.S. GDP shrank by 7.3%. Unemployment went almost to 25%. And the S&P dropped 44%.
Well, and these were brought in, again, at a time where they thought that it would
help.
It would help.
Yeah.
So you're going through an economic shock and depression. Well, let's set these new tariffs in place. It'll help sustain our local economy. But it did the opposite.
No, and then Canada's GDP obviously shrank as well. But some people say that this practice exacerbated the depression instead of helping it. Then we had the softwood lumber disputes. That's been going on since the 1982. So 1982 till today. So it's been a 40-year-old battle between lumber exports. The U.S. repeatedly has imposed tariffs, claiming Canada's industry is subsidized. So that puts them at a disadvantage with the producers that they have in their own market. So obviously, forestry stocks have suffered, and housing costs in the United States have gone up because of lumber shortages. So that's been the result. So you're paying more for stuff, and the U.S. consumer is paying for it. So again, has it been effective? No. So you can see where a lot of this is going. It's political, right?
Well, it's political, and then we're going to slide into the next subject here. Even in the United States, most business leaders, manufacturing association groups are against this, are against tariffs, because they know the outcome. They know the outcome is complete disruption. So yesterday, Monday morning, I remember opening up the Wall Street Journal. I checked that out every day, a couple of Canadian newspapers and the Wall Street Journal. And lo and behold, on the front page of the Wall Street Journal, they have, "This is the dumbest trade war in history." And it was so aggravating for Trump that Trump had to defend himself against the Wall Street Journal's assessment. He had to do a tweet basically downplaying the fact and sort of positioning himself as an individual who understands what's going on. But the point here is that this is the first assessment, first thing in the morning. Wall Street Journal, I don't think, could believe their eyes that it actually came through and essentially said, this is the dumbest trade move in history. During the same day, you have Jay Timmons, who's the CEO of the National Association of Manufacturers, come out and say a statement that it's completely contrary to what American manufacturers need right now. So here, these tariffs are supposed to prop up manufacturing in the States, and you've got the top person in manufacturing coming in and saying, au contraire, this is going to disrupt supply chains. It's going to be very harmful for American and Canadian businesses, but he's speaking as an American. So it's interesting. We're in Canada. We see all of the Canadian reaction, and we tend not to sort of take note of what the American reaction is. But there's a lot of Americans in here saying that this is ridiculous too.
Yeah, listen, people understand basic economics. If you remember your Economics 101, David Ricardo, right? The whole point of trade is that a country will focus on what they're good at and then export that so you can focus on what you're good at producing, and that will end up helping both countries. The reality is, Keith, that the decimation of manufacturing in the United States has been a question of technology and globalization. It has nothing to do with politics. Capital will flow where it's most efficient. And you're not solving by imposing tariffs. People are not going to suddenly turn around and say, let's produce stuff in the United States. When you look at lumber, for example, even if they wanted to produce everything in the United States, they can't because they don't have enough supply. That's why they have to buy in Canada. So everybody who is involved in the economy and the supply chains knows that this is true.
Yep, 100%. And the interesting thing from the stock market perspective, as we were leading up to Monday, we basically had a 3% appreciation in January.
Yeah.
It was a very strong month of January in the stock market, global stock, Canadian stocks, U.S. stocks, international, everything did quite well. And a variety of things were going on, but one could say they definitely were pricing in the fact that this was negotiations and that we wouldn't actually get into a trade war. And we wouldn't actually come through with these higher tariffs.
Which is interesting.
And they wouldn't stick. These higher tariffs wouldn't stick. So early yesterday morning, before any of the extension of 30 days for either Mexico or Canada, the markets were off about 2.5%, which is kind of a moderate bump, a decrease.
It's not a collapse.
No, far from it. But by the time Mexico had got their extension, the market kind of lost. And by the time the end of the day, Canada got it. And then today the markets are up. So we're kind of flat again where we were. But essentially, the markets were pricing in that this was simply going to be a negotiation. So now it's almost like you pick up a deck of cards, you throw it up in the air because nobody really knows where this is going to end. I think the markets are still suggesting that this is a negotiation tactic and that calmer heads will prevail. But sitting on this side of the border in Canada, it's not a great feeling.
No, I think something's been tainted for sure.
Yeah. So, I mean, again, we're looking at this from what if the tariffs, again, we don't like doing that, but because we were so close to having it, I think it's practical to talk about what economists were suggesting would happen if these tariffs were to come through. So let's point to, we've read the reports from RBC, from National Bank, from CIBC, from Bank of Montreal, from all the major economists. What were people talking about? Unemployment, inflation, currency, and growth. What were the main themes that people were suggesting?
Right. So the BOC predicted that if we do have 25% increase in tariffs, we could see Canadian GDP fall by 3.4 to 4.2%. BMO said that we can essentially go to zero. So actually enter no growth or negative territory. That's across the board. If you read any report, it's around that. Unemployment can get anywhere between to 8 and 9%. It's currently at 6.8. The Canadian dollar could see a decrease to $65 to $67. And inflation could go up from 0.5 to 1%.
Inflation would go up by 0.5 or 0.1.
Correct.
Yeah.
Correct.
So if Canada's at like 1.8, we could have had a high 2.
Correct. And like you said, we can have a situation where the Bank of Canada is in a very tough situation because we're seeing inflation go up and we're seeing lower growth, high unemployment, and now they have to cut rates because they're dealing with inflation that being higher. So there's going to be industries that are going to be affected more than others, like oil, automotive, agriculture. Stocks could decline based on the industry. And I think that's generally the consensus, but please correct me if I missed anything.
Well, no, that's a nice summary. And, we were talking about this offline yesterday. My interpretation of if these tariffs were actually to be in place for a year or so is this would be Canada's credit crisis. Yeah. I remember during the credit crisis that it was really the U.S. market, U.S. consumers, U.S. citizens that really took it hard. Their home prices were devastated. Their stock market was devastated. Nobody had confidence in them. Their financial system was collapsing. They were a significant cause of this. Whereas in Canada, home prices weren't extended, borrowing wasn't elevated, and people kind of got through it. Yes, unemployment spiked, but it wasn't severe. We are starting off at a very deteriorated base right now. Like before this, you could argue that we had some pretty major economic challenges of our own. And so to add this on top of those economic challenges, where there's massive levels of debt, high levels of unaffordability of homes, you start jacking up unemployment. This is a major, major issue that this country would have to deal with.
And we already have low productivity numbers.
Correct.
We're coming from a weak place.
We're being asked to play a power move, which is really go against the headwinds from a position of weakness. Yeah. Now, when I look at the number of recessions we've had in Canada, like really tough ones, it's been a long time, Marcelo. I mean, I think the last real tough recession that Canadians went through was 1991. It's 30 years ago.
Yeah, it's a long time.
It's a long time.
That's like a whole generation that hasn't experienced.
And the last one before that was 1981, like a tough one. So tough being if you can get unemployment up around 9%, you're going to start hitting tough zones with not an easy way out.
Do you remember what the unemployment rate got to in 91?
91, I believe it was, and I graduated in all tough recessions. I think it was 11%.
Wow, that's high.
Very high. Very high. So that said, I look at where we're at right now, and it's like, if that was to hold true, a lot of this is if. We don't ever like to predict. And this is not a prediction, but we are trying to help our listeners understand, like, what are the issues? Would we be able to get through it? Absolutely. People are talking about potentially a mild or medium recession, but they're not talking about a severe recession. I think all bets are off if we get into a bit of a global issue. But I do believe that calmer heads will prevail. I really do. At the end of the day, nobody wants this whole free trade and open trade to be hindered and collapse and make difficulties for individuals that live in Europe, in the United States, in Canada, in Asia, everywhere. Nobody wants that.
No.
So we just talked about the Canadian economy. Talk about the U.S. economy for a second. What would people suggesting would happen there if Canada was to retaliate? Like, we're a large part, but still, compared to their total economy, a smaller part than they are of ours. What were the expected effects to come through?
Yeah, I think big picture, you're right. I mean, we probably think about the U.S. every day. They don't think about us every day, right? Because it's just different magnitude. But I think it is a consensus from what we read and the research we did. They will see some slowdown in the economy, not a recession. So profits will decrease. According to Goldman Sachs, profits could go down about 3%. Cost of goods will increase, so inflation will go up. And that's a problem for them because they're trying to tame inflation. Already the Fed has said, because inflation has been stickier than expected and the unemployment rate has stayed very low, they've kept rates higher. So that could be a problem for the Fed. And the longer the trade war stays, the more risks you have in the economy as a whole. That's the consensus that we've seen. Of course, not even close to what Mexico and Canada would feel, but they would feel some pain.
Yeah, and I guess the biggest takeaway there would be that the Federal Reserve would not have a chance to decrease rates. They're saying essentially that's off the table now. Whereas if individuals, investors, business executives, owners would have been looking into the future saying, okay, we can see 1 or 2 interest rate cuts. That will not occur if these tariffs were to hold. Okay, so the biggest concern that individuals would have, again, we got to jump back and forth in time here because so much has changed. The biggest concern yesterday morning, and even today with China now coming out with them increasing their tariffs on the U.S., holding back critical minerals, is that everybody might get edged into a global trade war. And if that happens, that would be sort of the worst case scenario in all of this. You want to elaborate on anything there?
This is what's puzzling to me. This is just my opinion. When you think about the relationship with the US and China, they've been at this for the last 10 years, going back and forth with trade wars and tariffs and restricting AI chips. But when it comes to Canada, it's just out of the blue. And I just don't get the logic. So my gut feeling says that it's just politics and cooler heads will prevail, like you said, but we'll see where we end up. I mean, anything's possible with Trump, I guess.
Yeah, well, that's the part that's chilling, is that it's very hard to manage. So just think about this for a second. You're an international business. You have $1 billion in some plant, some technology plant. You want to access the U.S. market. You knew in the past you could put your plant in Canada and benefit from having an operation in Canada. But now you might feel that you need to maybe go to the United States in order to circumvent and not get caught up in the tariffs. Where do you think that company is going to locate now?
And we've seen in the news, I read yesterday that a lot of European companies are planning already to expand their operations in the United States because of that risk.
So it puts more pressure on Canada. Is this trade strategy going to work to increase U.S. production?
No. The evidence says no. We saw it in 2018 with the steel and aluminum tariffs. That didn't bring U.S. manufacturing. In fact, companies moved production to Vietnam, India, and Mexico instead. Reason for that, it's easy. Labor costs in the U.S. are still high. And we know from other research pieces that we read that tariffs don't fix supply chain problems.
Which would lead the average individual, a rational person, to say that if they're really going to push on this, it's not because they actually, and there's enough smart people and business feedback saying to the Trump administration that you can't put these on long term. The only reason why these have to be in place would be to negotiate.
Correct.
So what are the possible silver linings here, Marcelo? There is a lot of discussion. We've talked kind of heavy language here about the downside to all this. Again, we're Tuesday. We're going to release this episode on Thursday. We don't know what's going to change between now and Thursday or Friday morning. We have a month break, but we don't know what's going to happen after that. There's a real warning bells that have gone off. And I think the good news is a lot of Canadians are starting to think about things now. And there's a lot more discussion of national unity, getting in the same rowboat, rowing together, moving forward together. So Marcelo, what are the possible silver linings in this scenario? Let's think optimistically here. So what are the discussions that we're seeing right now about how we can prepare ourselves for the future?
Yeah. And you know what? In all this turbulence, I think there's a glimmer of hope. There are positives for this. I think you're hearing a lot more the country uniting. Even journalists, I've heard a lot in the news, and Rob Carrick was one this weekend, Nicolas Berube in La Presse. They were writing about come together, support Canadian businesses. Let's tackle this together. I think that's something that's entered the zeitgeist that wasn't there before. And to me, it's emotional, but it's also exciting because I can tell you for a fact, I've been here for 15, 16 years. I have never been in a situation where people are uniting around an issue in Canada. Even the pandemic where we thought we were going to get this, we got division and conflict. But now I feel like we have this issue that we can unite together. And I think that's a positive thing coming out of this. Obviously, the second one, that's a big one. It's like an elephant in the room, so to speak. And it's something that we've had for years. It's eliminating the interprovincial trade barriers, which absolutely make no sense when you think about having a country and a union in a federal environment that we have all these restrictions. And I mean, we were talking off mic, but yeah, it's just insane that we have all these restrictions across provinces and an electrician can't go and work in Ontario. The fact that a nurse can pack up her bags and go to work in Ontario or in Alberta, it's crazy.
That's one of the things that a lot of commentators are saying is they say it's the low-hanging fruit. But again, when you get to regional differences and protecting your local environment, it is perhaps harder to do. But that said, I 100% agree. I mean, this is a time now where what's the alternative? Yeah. The alternative is to have a dysfunctional relationship with a bully. And so I really think that's a big opportunity for provincial leaders and federal leaders.
Yeah. We need to also expand trade across the world. Go sign trade agreements with South America, Europe, Asian countries.
Well, the problem is, though, Marcelo, we have signed a lot of international trade agreements, but we still have a hard time getting product and actually making an effort to get away from the big U.S. partner relationship. Yeah. So, and there's a couple things. As soon as you say that, you'll get into this conversation in Canada about interprovincial pipelines, pipelines going across the country for natural gas, for oil. And I think what we'll see is that conversation will come up again. And I hope there's more of an openness to evaluate how we can jointly bring our northern strength of resources to the marketplace.
It's very political in the country.
It's very political, but again, trade with Asia and trade with Europe is something that's been talked about for a long time. And maybe this is what's needed to actually push us off the ledge to go do it.
Yeah. And the US too, right? Like we're uncovering a bit of a hypocrisy there where they're saying we care about democracy and spreading democracy in the world, but if they don't buy Canadian oil, they're going to go buy it from Venezuela. Good luck. So, yeah. Anyways.
I'm seeing your Latin American blood come out now, Marcelo.
Anyways, so the other one too is national identity. So I think as Canadians, we have a choice at every purchase we make to buy Canadian products. That takes a little bit more effort, but effective immediately. I told my wife we should cancel every single service that comes from the United States, including buying at Costco. She wasn't too happy.
Well, you know what my wife did last night? Yeah, she canceled Netflix.
Oh.
Yeah.
Okay.
Imagine that. And she started going through a bunch of things.
Yeah. I think we're going to see more of that. We're going to see more of that in a lot of industries. And the last one, which is a big one too, a weaker Canadian dollar for all of its negatives also has a silver lining there that it makes our goods cheaper for other countries. So we become more competitive in the world. So if Europeans or Asian countries want to buy our stuff, now that costs less money.
So those are some of the big takeaways we're hearing a lot of economists talking about. I think one of the other underlying takeaways is that it's been a long time since we have put energy and focus on the economy. Now the government is saying to entrepreneurs, go out and take risks and expand your business in these other areas. But in the last many years, this isn't exactly a business-friendly country. We penalize risk-taking. We tax it higher than other countries.
Well, the bureaucracy.
We don't encourage it. We overregulate it.
The ease of doing business is not as easy as in the United States.
Businesses have been villainized by all sorts of statements saying that they're not doing their fair share to help the economy. And I think this is going to change, and I think we need to make it change. This country has to become more productive. And I think the word productivity is a word that leadership from all different parties has to start figuring out how to improve it. What are some of the investor takeaways? We spent the entire show today, Marcelo, episode, not talking about investments. Let's switch gears a little bit and shed some light on what we feel people should do with investment portfolios.
I'll leave you with 4 points. So one is you can expect volatility because markets will be choppy just because there's something markets hate, and that's uncertainty. And right now we have a lot of uncertainty in the market. We don't know what he's going to say next or what he's going to decide next. So you have the rational view of things, and then there's the way he views the world. So I think we are going to see some volatility, and you need to be ready for that. But if you've been our client, you know that this is a normal part of the markets, and it's the reason why we get paid. Why you get paid as an investor, not us as advisors. Just thought I'd clarify. So some industries will adapt and benefit. Of course, this is a natural way of things. Did you know that one of the most innovative periods in the history of the world was right after the Great Depression? The reason for that is because people, when there's need and there's struggle, they find ways.
Well, it's interesting you say that because there was also another period recently, and that's after the 2008 credit crisis. That is a period where there's a tremendous amount of
spike in entrepreneurship,
especially in the United States, because they went through a very difficult period. Difficult periods breed grit.
Yeah, they bring out the best in people. It's sort of like what I told you off mic. Sometimes you have to break the egg to make the omelet. Yeah. So I think we will come out of this. It'll take some time to adjust. Then as an investor, you stay diversified. We were having a lot of conversations, during the annual review. Should I put everything in the United States? I think this is the time. I cannot think of a better time of why having an international and global portfolio makes sense. So this will weather the storm in stocks because you'll be protected in some areas.
Well, you'll still have volatility.
Yes.
Like if there's a bit more of a protracted global issue, a lot of different countries will be affected. Yeah. But that said, we believe you must maintain globally diversified portfolios.
Correct. And last is just stay clear of predictions. I think we've talked about this subject like 60 times in this podcast, but we know predictions don't work. And you had a nice slide here regarding predictions.
Well, the second slide I have is last year's predictions for 2024. We have a list of 20 brokerage firms scattered across the United States and Canada. And the S&P 500 generated call it a 24% local U.S. currency return. And boy, half of the forecasts were negative returns up to negative 10 or 15, and the other half were positive up to 5 or 10. Bottom line is that they were all over the map. And it's easy to get suckered into a prediction because it feels right. It touches your emotion, but now is not the time to be moving portfolio parts around based on a prediction because it's moving way too quickly and there's no way people can predict. There's no way people can predict. I like your story about grittiness. The story I looked up about where I thought Canada might possibly be in is the George St-Pierre story. You know the wrestler?
Yeah.
It's a great story. And you hear this all the time about certain kids, you get picked on in elementary school and high school. Well, he was picked on. He was beaten up.
He was bullied, yeah.
He was bullied. He was bullied and he changed the way he went to school. He started training. He started doing mixed martial arts. He started doing push-ups and chin-ups. And fast forward a decade after, he's like the world champion, unbeatable.
He's one of the greatest of all time.
He's one of the greatest. And I kind of think Canada's in a bit of the similar situation. We're being bullied right now, and Canadians are strong people and resourceful individuals. And I think that we've got an opportunity to sort of, if I could use a sailing term, redirect the rudder and put us in a new direction. And I am hopeful that some of the leadership elections coming up will put us in a spot where we actually have leadership now in the country and are able to move forward.
You know what's funny about the George St-Pierre story too? He was a tough individual, but he was also one of the nicest people you meet. I met him twice in person. So nice, you cannot believe. And he's super humble. So I think it's a good analogy because Canada can be tough and it can be nice too.
Well, he's very Canadian. All right, Marcelo, and to our listeners, thank you so much for tuning in. This was a show that we put together specifically based on fast-moving events, and we wanted to get something out for your interest. Thank you so much.
You've been listening to the Empowered Investor Podcast, hosted by Keith Matthews. Please visit tma-invest.com to subscribe to this podcast, learn more about how his firm helps Canadian investors, or to request a complimentary copy of The Empowered Investor. Investments and investing strategies should be evaluated based on your own objectives. Listeners of this podcast should use their best judgment and consult a financial expert prior to making any investment decisions based on the information found in this podcast.